Evening class. I'm sure you can hear me and you can see my screen very clearly.
Good evening, sir.
Hi, Elijah. So you are welcome to today's class. I guess we should go straight to what we have for today. And what we are looking at today is a very key topic in corporate reporting called called disclosures of non-financial information in the annual report. And maybe I will have told you before, this topic covers 20% of our syllabus. And so fundamentally, an annual report is the competence we want to learn in this class, is the core of corporate reporting, an annual report. And when you have an annual report, it comprises majorly two sections. There is the section of the financial statement, and there is another section dealing with disclosures of non-financial information. You see, that part of financial statement, that is where we have focused our efforts for several weeks now, right? As important as they are, this part of your syllabus is also extremely important. You see, the financial statement part comprises those statements and also the notes. Those notes are also disclosures as well, but majorly financial disclosures. So today, we are moving away a little bit from financial statements, and we are going to look at some other part of the annual report that you need to know before you go into that exam. And that part is disclosures of non-financial information in the annual report. And for this part of your syllabus, you are expected to understand and be able to appreciate and convince anybody around one, integrated reporting, two, sustainability reporting, then we have corporate governance reports, then risk management reports, as well as corporate social responsibility. We're going to look at each of these, and hopefully we would also look at few past questions on how I can have asked these questions in the past. I will start with sustainability reporting first. So let me go to that part of our notes that talks about sustainability reporting. So, and when we look at this, when we look at this, I would really tell you where you should focus on. But the reality is that you need to know every part of it, because this note I'm sharing with you, I think is around 25 pages. You just have to read it and read it over again and get a good grasp of it, because it's 20%. So, I mean, you really have to know everything. But now, sustainability reporting. The first thing I will look at is sustainability itself. What is sustainability? And when we talk about sustainability, what we are really looking at here is the ability of entities, right, to meet their current need without undermining the ability of future generations to meet their own needs. We are saying that, okay, meet your own need right now, but don't negatively impact the future generation to meet their own need. And what that is saying when we talk about sustainability, it really looks at it's fundamentally three things, right? The first is that you need to seriously look and take care of the environment, which I call here environmental protection. Then the second is that when we talk about sustainability, you must ensure that you'd look after, or you take good care of your society, your community, and the people that if you have people that work for you, you should take care of them. And that is social development. And the third one is that if you are in business, you must run that business in a way that your growth will not create economic difficulty for the society, which is economic good. So for your syllabus, when we talk about sustainability, which is really saying that you have to move or operate in a way that you will not deny future generations from operating. That sustainability here is fundamentally three things. Number one is environmental protection. Here, the mission is clear. We are saying that you must ensure that your natural resources, when you talk about your environment, you're talking about the natural resources that you have. You must use them wisely. We are really looking at all the free resources that an entity would have. You must use them in a way that you don't deplete them, that future generations will now not be able to have access to them. So if you have, for example, maybe a government give you access um, to cut trees, right? It's expected that even though you have been given license to do that, you should do it sustainably, in the sense that when you cut one, probably you should grow more than one, maybe two or three, even though there are regulations for these things, but these are ideas that entity needs to understand and follow through. So the first one is environmental protection. The environment must be protected. The natural resources that we have, we must use them wisely. All the living creatures, everything within the environment, you must not destroy it, right? Which is why we are talking about climate change is a very topical area at this era. Another one is social development. Now, what social development is looking at is that sustainability is beyond just environment, is beyond just ensuring you use your natural resources wisely, ensuring that when you cut down trees, you do another one, ensuring that you don't kill anything that has to do with the environment. You don't do that. It's beyond that. Sustainability also involves an entity's relationship with the community, with its employees, with the government, with the regulators. Social development is also about sustainability. So when we look at from the angle of the community, an entity must find a way to give back to the community. It's sustainability also. An entity must ensure that it gives equal employment opportunity to anybody that wants to become an employee in its organization. And an entity must ensure it maintains gender equality. An entity must ensure that its employees' well-being and mental and their mental stability is well taken care of. So when we look at sustainability, the society is a major part of it. So social development. And the last one is economic growth. Sustainability is a major focal point when it comes to businesses. And businesses must operate in a sustainable manner. We are not saying you should not run your business. We are not saying you should not grow, but grow sustainably. Sustainably in the sense that your growth will not result to economic difficulty to other business areas, to the environment, and to even you yourself. That is economic sustainability, which we term here economic growth. You see, why I'm taking a lot of my time here is that mostly what we are going to talk about in sustainability reporting borders around these three areas. That is all sustainability is all about. So it's about environmental protection, it's about social development, and it's also about economic growth. If you can remember these three topical areas under sustainability, you would be able to really give a run and have very good points in your exam. Okay, now let's move on to something else. Now, still under sustainability, here is importance of sustainability. If an entity is sustainable, poverty and hunger might end, standards of education and healthcare might be improved, gender equality might be achieved, sustainable economic growth while promoting jobs and stronger economies, and also sustainability, health of the land, air, and sea will be maintained. You will see that all these importance are things I've indirectly mentioned when I was explaining those three: economic protection, social development, and economic good. For me, if you can understand those three areas, whatever the examiner wants to ask you in the exam, you would be able to come up with points. So when we have sustainability and we appreciate the importance, it will definitely really improve quality of life. It will protect the ecosystem, the environment, the business ecosystem, all relevant ecosystem, the society ecosystem. It's really more of the environment. And also it will preserve natural resources and wildlife, and also sustainable practices would result in overall reduction of operating costs. So all of these can really go for importance of sustainability. Okay, so that's sustainability. Because it's theoretical, when I'm teaching theoretical courses, quizzing always come handy. Number one here is that sustainability is the ability to preserve resources and energy to nourish and provide for the future rather than exhausting them to meet. This was how I explained sustainability, so this is true. Also, sustainability addresses the following except, I talked about environmental, I talked about economic, I talked about social, I didn't talk about ecological, even though this one also is very close to the environment. But this is the odd one out in this context. Another one is sustainability is governed by the following principle, except I talked about environmental protection, I talked about social development, I talked about economic growth. I didn't talk about ecological protection, even though it could be relevant, but to be specific, this is really odd one out in this case. Another one is that aims at promoting communities, eradicating poverty, and ensuring equality. That's social sustainability. Okay, so this first part of this sustainability reporting under sustainability is just for you to understand that sustainability is all about environmental protection, social development, and economic growth. I hope that would help you. Now, so an organization that is sustainable, we look at that under corporate sustainability. So organizations in business must find a way to understand issues around the environment, social and economic, and they have to run their business in a sustainable manner. And how do they do this? They have asked this in your exam before, that how can an organization be sustainable? Or how can an entity operate in a sustainable manner? You see, one of the importance of sustainability we saw up there was that it will lead to reduction in operating costs. Yes, you will learn that very soon, because sustainability could be, when you're taking care of the environment, you find a way that if you're into production of maybe disposables, maybe a company that produces pure water, if they are environmental conscious, they will find a way that they would ensure their customers find a way to dispose those disposables in a way that they can get it back and recycle them. So that would substantially reduce their cost of raw materials going forward, right? So when an organization wants to be sustainable, here we are saying that they should look internally as well as looking externally. When they look internally, it means that they have to be energy efficient. If they are energy efficient, they will reduce waste, they will reduce their carbon emission, they would limit a lot of things. Another one is limiting production, their product waste and toxicity. And also is that they would find a way to design innovative products. I mean, they would adopt maybe advanced technologies to ensure that their product does not constitute economic or environmental nuisance to the society. But these are ways entities can be sustainable. And another one is that they can educate their employees on sustainability, reducing waste and increasing energy efficiency. So these are ways an entity can be sustainable. And when it looks at looking externally, and externally what has to do with finding a way to um, to meet or discuss with maybe their customers so that they would maybe dispose their product properly, maybe their suppliers, so that they will ensure that is only um, um, items that are recyclable or sustainability conscious items or sustainability conscious suppliers that they actually deal with, and all of that, and also engaging their community and also the rest. Imagine a bank saying that they would only give loans to businesses that wants to invest or that are sustainable or environmental conscious or that are green conscious. That would go a long way to make that bank a sustainable business, because they would push their supplier and their customer, majorly their customer in this case, to ensure that they implement most of these things I've actually talked about around the environment, the society, as well as the economy. Okay, so that is how an entity can be sustainable. So please take note of this. You have to know it, read it, and make it part of you, because they can ask it in the exam. So there are other areas that how can we measure, um, uh, how can we really know that an entity is sustainable? So this is pretty much what I've talked about before. It's still around environment, is still around their corporate governance and their economic measures, and also their social measures around their environment. So we can look at their key environmental performance indicators. You can look at their environmental compliance, right? These key performance indicators could be, okay, what's their carbon emission, their waste management, all of that. They are all still here, but all this environment, like how did they comply with environmental regulation in the country that they operate? And so impact on climate change. So what's their impact on climate change? Their impact on biodiversity and land use. How did they source their raw materials? Okay, this one is very key. This one is very key, especially those developers, right? That or those that get all these granite, sand, and all of that, or those that are extracting biofuels or is it fossil fuels from the ground, converting it to petrol. How are they doing all of these things? And are they destroying the environment in which they are operating? And also is emission and waste management, energy efficiency in operations. And energy efficiency could be probably they are using alternative sources of energy instead of burning diesel every time and impacting the environment. Are they using solar? Are they using wind to generate power? and also to use that to power their machineries and all of that. All these are ways we can measure entities that are sustainable. And also is their economic compliance, and also their corporate governance. So one of that is you are saying you should grow your business in a way that you won't create economic difficulty for others. One of it is tax compliance. Yes, companies that are tax compliant, operating sustainable, because for you to pay tax is like you are giving opportunity for future generations to also be able to be in business, because paying tax would enable the government to give back and build infrastructures and get the environment ready for the future generation. So transparency and accountability is part of it. Regulatory compliance is part of corporate governance. Business ethics, corruption, anti-competitive practice. So all of these also are ways to see companies that are sustainable. So sustainability is beyond just environment. It is also how companies operate economically, right? Their business ethics. Do you just go out there, you don't want competitors, anybody that produces similar products that you are producing, you want to ruin them, you just want to be a monopolistic, you want to make your industry a monopolistic industry. That is not sustainable, right? And this is what corruption and competitive practices is looking at. Then the society also, you're looking at how you treat your employees, labor management, their health and safety, supply chain management, product safety and equality, privacy and other security, responsible investments. This responsible investment is just similar to what example I gave you about banks lending money to solely um, solely to borrowers that are operating sustainably or sustainability conscious. Then we have stakeholders management and social investment. So sustainability reporting, like I've mentioned earlier, is around economy, is around environment and society. So all of this is still turning around almost the same thing. So entities can build sustainability strategy by including sustainability in all their decisions. Whatever decision they want to take, they have to consider that, is it environmental friendly? Won't it involve denying the government, the people, their competitors access to the same resources? I mean, you need to consider these three factors: environment, economy, and society when you're taking your decision. Work with suppliers and customers to ensure that they dispose of your product responsibly. Engage your community and reach out to your local community and stakeholders to ensure that they are good, and also be sure that you as an entity, you're a good corporate citizen. So, and I have some benefits of corporate sustainability here. It's just similar to the one I've mentioned earlier. Okay. So ensure that there's continuous availability of resources, boost revenue while lowering costs, increases employees' productivity, sustainable business practices, mitigate risk, improve brand reputation, attract investors, stimulate. Now, okay. So this one, yeah, I can remember vividly the last time I can ask this, that why do entities, what are the issues that drive entities to be sustainable? Okay, what are the issues that drive them to be sustainable? One of it is regulatory obligation and compliance. Like in Nigeria now, we have adopted sustainability reporting standard. So most entities, especially quoted companies now, have no choice than to report on their sustainability activities, their sustainability action. So one of the drivers of sustainability is regulatory obligation and compliance. Another one is, is a pride for any entity to say that they are contributing to sustainable development. Okay, it's a pride that, okay, we are also a contributor. They can write that in their report. It's one of the driver. Another one is risk management. And risk management is particularly speaking to environmental and social risk and relating to if you are not sustainable, you could have a risk that your reputation, your trust could be severed. So it saves reputational risk. It reduces reputational risk to a large extent. Another one is stakeholder support. So similar to reducing reputational risk, one of drivers is that organizations want community, their employees, the government, they need them to be close to them and they need them to support them. And that is why most of them would want to operate sustainably because now most investors have they even would only invest in companies that are sustainable. So they call that responsible investment, right? So it's part of the drivers of sustainability, then which takes us to capital availability. Like the last point I made, investors would only give their money to companies that are sustainable, and ultimately it's going to improve operational efficiency. So all of these things I explained here, some of the regulators or regulations, and the most recent one is this ISSB, International Sustainability Standard Board, is the body right now in charge of sustainability in Nigeria, if I want to bring it down to our level, right? And SEC also has some regulation. Nigerian Stock Exchange has some codes before we finally adopted ISSB. And I gave some notes here. Okay, so I've been talking. Before I go to reporting on all of this, let's quickly look at these 4 quizzes together. So number one is that sustainability requires a company to look internally and externally to understand dash and dash impacts. Okay, let me confirm that you guys have been following me because I know some of you might be watching the match.
We are
So,
here, sir.
okay,
I-
Elijah.
I'm actually jotting the questions you're asking, so I would snap and send them to the group.
Oh, that's fantastic. So sustainability requires a company to look internally and externally to understand their dash and dash impacts. What do you think would be the answer? We can guess. Who wants to give you the shot?
Environmental and social impact.
Hmm.
C.
Environmental. C, Abby?
Yes.
Environmental and social impacts. Okay. Any other guesses?
B.
Economic and environmental impacts. Okay. So which one are we going for? B or C? B or C? Because like I mentioned, sustainability is about environmental, economic, and environment.
C.
So when
I'm going for C.
yeah,
C.
so C, okay. I think that's what I would go for. So only Jolade is going for B. So I hope she will not be right and we are all wrong. But I would go for C as well, economic and also social, because when we look at that internal and external here, it was really referring to educating employees, reducing waste. So it's more of environment and social than economic now, right? So I think we are right. Angela is wrong. So now let's look at the second question. It said that companies can address sustainability internally by educating employees, reducing waste, increasing energy efficiency. What's the answer here? What's the answer here?
All of the above.
Yeah, that's correct.
D. All of the above.
I agree with you.
D
So
is
the
the
next
answer.
one, yeah, I agree with you. So the next one that says that companies adopt sustainability practices in their business activities only because of the pressure of their stakeholders. I think this is referring to that sustainability drivers, talking about regulators, risk management. So is it true, false, all of the above?
B, false.
Yeah, I
It's
agree
part
with
of it,
you.
but it's totally false.
Exactly. So it's not totally that, it's beyond that. So and finally is the following are steps to build sustainability strategy. Include sustainability in all decisions, work with employers, engage your this one is all of the above. These are it. Okay, so very good one. Now, you see, sustainability reporting is just about communicating to users all of these things we have talked about. Communicating how you have been sustainable, how you have protected the environment, how you have been socially responsible in terms of what did you do to the community, how have you taken care of the health and safety of your employees, how are you even operating in a way that you will not cause economic difficulty for other businesses. Reporting all of these things is sustainability reporting. So one area that whether you have to cram or whether you have to understand to build points is this one. I gave a lot of points here, like almost 20. All you just need to know is just 5 or 6 or 7 out of all these 20 points that you have here, which is importance of sustainability reporting. And there are a lot of points from everything we have talked about. There's nothing new here. Okay. So by ensuring that organizations consider their impact on sustainability issues, making them developing a strategy to be so that they can be more sustainable. It will be a platform for communicating your sustainability performance. Organization will be to be effectively responsible, so they are accountable, and stakeholders will trust them. Their corporate reputation will improve. It will show that they are credible. It will build consumer confidence, not even consumer alone, investors, everybody, increase innovation, because everybody is happy with them, employees happy, community is happy, they are happy. It will improve their risk management, it will boost employee morale, it will help you learn. But it's a lot that I have here that you just need to find your way around in the exam, because I've seen severally, the examiner will always ask you this, that what's the importance of sustainability reporting? How can you what will make an organization to be sustainable and all of these things? Because the aim in the exam is not that you should prepare a sustainability report. The aim at this level is that sustainability reporting is not very popular right now. So new accountants that we are pushing to the market, all we just want you to know is that you should appreciate sustainability before you qualify. And wherever you work, you need to be able to convince your employer why they should adopt or report sustainability, right? So that's the competence majorly that we look at here. And one of the final things we look at is the reporting process, okay? And there are 5 reporting process. I don't say I can ask in this, right? So, but let me just talk about it. One is that you need to set your sustainability goals and objectives. You need to know how you affect the environment. So that would really make you set objective. That would make you have performance metrics. You need to know why you are sustainable. You need to know. Every organization know why. You see, there are some, their own is to maximize profit and sales. There are some is customer service. There are some is return on investment. There are some is general quality. There are some for personal review. So any of this or all of it could be your own way. It could be your own goal on why you want to be sustainable. So the first is have a goal and how you measure yourself, your performance metrics. Then, based on that goal, you can then go out and be sustainable. Then you'll be able to collect data. I'm talking about how you measure your performance now. You should be able to collect data and see how well you have been doing in terms of being a sustainable entity, right? So majorly measuring performance is all about your ability to collect data, to visualize your efforts towards being more sustainable. And also you then evaluate. Evaluation here means comparing your goals with your actual performance. That's evaluating your performance. Then you take actions. That's manage performance. You take actions. So areas that you are lagging behind, you then improve you would improve on that. So usually this is the steps entity follow when they want to report sustainability. I will show you example of a sustainability report very soon. You will see that the first thing they would really they will talk about is their sustainability KPIs. That okay, this is what we want to achieve, this is what we want to achieve. Then they will then start measuring it against maybe there is a regulatory requirement and all of that. So they will collect data on what they have done. Then that's how these four steps is how organizations report on their sustainability. So similar to what we have talked about before, so I don't really waste too much time on that, is that why the organization publish sustainability reports. So I segmented it into pull and push. One is investors, just for them to get money. Two is contribute to sustainability reporting. I've mentioned this before, right? Up there. Then there's a push factor that this one is forcing them, like the regulations, stakeholders, standards, and reporting initiatives and all of that. So all these are making organizations to be more sustainable. Before I look at this quiz, there's this final one is a sustainability reporting standards. Okay, so the most recent one is this ISSB, International Sustainability Standard Board, is the most recent. And these guys in June 2023, they came up with two standards, IFRS S1 and IFRS S2. I will not ask you this because organizations are still finding ways to adopt this. But generally, every other thing we have mentioned above could be asked. So IFRS S1 talks about general requirement for disclosures, and IFRS S2, just be aware that there are standards now for sustainability, and Nigeria now have started or have made a move to adopt that. So we are waiting for companies to start pushing out their reports for 2023, and we'll see how far they have adopted, but we won't see so much difference for now. But from 2025, when they bring out their report of 2024, most of them will have find a way and understand how to comply with IFRS S1 and S2. But for now, don't expect this in your exam. For as far as now, don't go and start sitting and be reading IFRS S1 and S2. Well, it won't be very bad, but I mean, it will be for another essence or another reason other than for your exams. So there are other standards like GRI, Global Reporting Initiatives. These guys are doing a lot of efforts. They have been there since the early days of sustainability reporting. They are NGO. They came up with a lot of initiatives just to ensure entities are sustainable, and there is international standard for organizations. So these guys have been around for a long time too, and they have these certifications for different categories. So they have certification for sustainability development too. It's called ISO 14001. There are a lot of ISO around, but they are also a body to be reckoned with. And there is another one by United Nations, responsible investments, that pushing for investors to only invest in companies that are sustainable and are environmental conscious, people conscious, and also not causing environment difficulties for its people and its competitors. And we used to have SASB, Sustainability Accounting Standard Board. Now it has been, all its roles is now handed over to the ISSB, but I mean, it's just good, they do exist before. And there is the United Nations Global Impact, is also another body. And there's these CDP, they call them Carbon Disclosure Project. So these guys, they have data around greenhouse emission and energy use data. So most organization, it is these guys that develop standards that, okay, this is the maximum emission you must do. So when organizations are measuring their performance on sustainability, is this CDP that they have the data on each region that, okay, if your emission is less than this, then you have passed. If it is more than this, then you have passed. So even when you check the Dangote report, you see that they try to compare their performance on sustainability with the CDP data. Okay, so that's that, and there are still some other things here. So I think that is all for sustainability reporting. But before I move to the next one, let's quickly look at these quizzes together. Number one is that a sustainability report allows businesses to be open about risk and opportunities they face. Yes, true is the answer. The second one, that helps the organization to be effectively responsible. Hence, greater accountability, reputation, and stakeholders' trust are expected. What do you think is the answer to this? Let me show you the options. Financial report, sustainability report, corporate sustainability report, annual report.
Corporate sustainability.
Corporate sustainability reports. Okay. Why not B, sustainability reports? Okay, let's see. I think it's B. The next one is which step of the sustainability process consists of the following: customer service, return on investment, general peer review? What's the answer to this? Is A. Yes, that's correct. A is the answer. Okay, so we talked about these reporting standards, and there's this one that I've not actually spoken about. This reporting pathways. You can just ignore this. I mean, you can look at it, but this one that you have to sustainability internal bottlenecks. That how do an entity overcome any barriers they have towards sustainability? So one of the bottlenecks is who is responsible for sustainability data. There might not be definition of KPIs, different reporting system, source and accuracy of the sustainability data within the organization. These are challenges towards sustainability reporting, but these are the solutions to those challenges. Get senior executive commitments. You should get a KPI, your key performance indicators. I mean, these guys will help you to do that. These CDP people, these Carbon Disclosure Project guys, yeah, they have all the data you can work with. Then standardize processes and system, implement internal controls and documentation. So these are ways to overcome all these lack of data, lack of KPI, lack of reporting system. I mean, it's just the reverse of, just do the reverse. Then a quizzing on this. Number one says that sustainability reporting standards can help reporting methods in terms of greater comparability and in eliminating selective disclosures and risk of misleading data. Yes, it's true. I mean, if you're not showing the exam, all these things you're talking about is good. So the answer is true. The second one is a unified standard is a standard that allows reports to be quickly assessed, fairly judged. Yes, it's true. That's the answer. The oldest and the most commonly adopted sustainability reporting framework globally among companies. What do you think is the answer to this? Is it principle reporting initiative, principles of responsible investment, global reporting initiative, GRC? I don't know what this one is. Then SASB, Sustainability Accounting Standard Board. Let me see.
B.
What's B?
Global
Reporting initiative. That's correct. So Jansa winning. The next one. The following is not an example of a standard. Okay, which of these is not an example? Should be B. This one is there. This one is there. This one is there. I don't even know what this one is. Which of the following entities provide a global disclosure system and warehouse greenhouse data emission and energy used by corporate entities? I mentioned this one severally. The carbon, yeah, this is B. They have data on sustainability that you can use to measure yourself. Okay, so finally, this one is talking about the difference between financial reporting and sustainability reporting. Everybody knows that financial reports uses historical information to present an entity's performance, position, and cash flow position. That's financial reporting. Well, sustainability reporting is going beyond that. Sustainability is talking about how organizations would measure their impact on the environment, society, and also try to understand how their economic activities might cause economic difficulties for the environment, for even their competitors. That's sustainability reporting, right? It's different when we are measuring performance from the sustainability standpoint. It's not just about money. It's about the society. It's about how you treat people. It's about how you treat the environment. It's about I mean, how you give back to the government. It's about your business practices. It goes beyond money. Which is the focus of financial reporting. Okay, so that is it about sustainability reporting. So very soon I will show you how it is asked by ICANN in the exam. So, but for now, I would move to corporate governance report. This one is very short and straightforward. But before then, do we have any questions? Any questions or concerns? No questions. Okay. So for corporate governance reports, the issues here are actually very straightforward. And the focus of corporate governance is that every quoted entity, there is a SEC requirement. There is a SEC requirement that they must include corporate governance reports in their report. So it is compulsory. It is a mandatory, just like sustainability reporting will become mandatory because we have adopted the standard from SSB. Now, corporate governance report is mandatory. And I have the content here, and everything about this report is just about the board. So like, you need to tell us the composition of the board. You need to tell us their roles and responsibility. How do you appoint them? How do you evaluate them? How do you elect and re-elect them? The board committees you have, the roles of those committees, the number of meetings you had on the board, all of those things. Even the company sustainability policies, their human resources policies, their code of conduct, all these are about. So the best ICAN can ask you in the exam when it comes to corporate governance is the content of corporate governance report for 7 marks or 5 marks. And you will have seen it severally. So if you can know 5 or 7, you are just fine for this part. So for 7 marks, that's very, very cheap way of picking points in the exam, very cheap way. So we have many here that you can just look at for sustainability, for corporate governance report. So for my physical class students, we have talked about risk management report before, so I'll just run through it before we look at past questions, right? So another part of non-financial disclosure is risk management reporting. And this is also a requirement by SEC. SEC requires quoted companies to present a risk management report. And the requirement of SEC, you have to know that one because there are like 5 or thereabout. Number 1 is that every public company must establish a risk management committee on the board. They must include risk management as part of their accounting policies. This is huge. When you say including risk management as part of your accounting policies, it means that every transaction you want to consummate, you must consider the risk inherent in it. That's incorporating risk management in your accounting policies, right? So any transaction, anything that enters your book, you must consider the risk involved before entering into it. You must also have, this one is not here, you must have an officer in charge of risk management in your company, is also a requirement. You must tell us the material impact of unmitigated risk on the company and how do you prevent the risk your company is exposed to, right? So I kind of asked this part severally. So you have to know it. So asking you, what is the SEC requirement on risk management in Nigeria for 5 marks? That's one of the cheapest points you can ever have in an exam. So please take care to know this, and I'm sure the examiner will take care of your marks. Another very important part of risk management reporting is risk reporting, which is the component of a risk report. Number 1, so a risk report will contain that. 1 is your risk agenda, explaining why you have adopted or why you have incorporated a risk management framework, your risk agenda. Then risk assessment is looking at, okay, what are your risk? What are your identified risk? What are your principal risk? And risk assessment also goes beyond just identifying those risks. You need to give us an idea of the impacts of those risks on your company. And risk response is your risk management approach. How have you managed those risks? How have you mitigated those risks? You need to report it. It's compulsory. Then, of course, risk communication is similar to risk reporting. Then communicate all of this, your agenda, your assessment, your response. And risk governance is from having a committee to having somebody in charge of risk management. Some organization would even have a department in charge of risk management. So that's this cycle. That's what it's talking about. You have to know this for your exams. You have to, okay? And that is it around risk management. And another very important part I've seen I can have severally, apart from these two I've talked about on risk management report, is the benefits of organizations having a risk management framework. The importance of having a risk management framework. That is also extremely important. You see, these are points you can develop for yourself, because number one that I want to talk about is maybe improved decision making. It could be probably understanding an entity's risk profile. It could be also around in improving investors' confidence. It could also be around preventing avoidable losses. It could be also be around regulatory compliance, because when you have these things, that means you are complying with SEC requirements. It could also be around improved productivity and financial performance. And a lot. These are things that would help you save costs. These are things that will make you even have access to increased capital, because investors will trust you. You can think of a lot of benefits that can come up. When we look at past questions in the next few minutes, you would understand what I'm talking about. And also is CSR, corporate social responsibility. You see, most organizations now report CSR. They have been reporting it separately, voluntary, but with sustainability reporting, that social part of sustainability reporting is CSR. So indirectly, we have already discussed CSR. Okay, so there's something we call ESG reports, environmental, social, and governance is under sustainability reporting. So CSR is about how organizations have given back to the society, to the people, to stakeholders entirely. That's CSR. So what have you done? So it's just the same thing as that social development or social sustainability under sustainability reporting. So yeah, the next part is past corrections. But before I go to past corrections, there is a final one that I've discussed with my physical class students before we look at past corrections. Is this other one? I will just point out to you what you need to know here. Is this guy integrated reporting, right? So the core of integrated reporting is saying that organizations have to do better than just reporting historical performance and giving us historical position. They need to do better than that. This guy is saying that organizations must show us much more. They have to think in an integrated way, in such a way that starting from their strategy to their performance, they need to tell us, explain how those strategy has created value for the organization in the short, medium, and long term. That is integrated reporting. Don't just tell us that you made a revenue of 100 million. You need to tell us what strategy did you use? How has that strategy created value for you? That's your performance. And how will it create value for you in the short term, maybe in the next 1 year, in the medium term, and in the long term? That's integrated reporting. It's just about creation of value. How have you created value? Report it. And that is integrated report. If you look at the definition I have here, I said is a concise communication about how organization strategy, governance, and performance and prospects in the context of its internal environment leads to the creation of value in the short, medium, and long term. You don't have to cram anything here. You have to understand it. The core of the integrated report is about how have you created value, your strategy, your performance, how, in the context of your environment, of course, where you operate, how will it lead to creation of value in the short, medium, and long? You need to connect all of those information and report that in your books, right? And there are bodies that have made effort to making this happen. And one of the earliest and oldest bodies is the International Integrated Reporting Council. You need to know this because last diet, I can still ask this, that what effort have these guys made towards integrated reporting? Because they are the first set of people. They put together regulators, investors, companies, standard setters, academias. They came together and they came up with an integrated reporting framework. So this framework was what was guiding companies towards how they can report on their value creation. Okay, but as it is today, as of today, this body is no more as of today because they came together with the Sustainability Accounting Standard Board, which I mentioned earlier when I was discussing sustainability. This body also is no more. So the two of them, the International Integrated Reporting Council and the Sustainability Accounting Standard Board, they came together to form the Value Reporting Foundation. As at today, as at August 2022, this Value Reporting Foundation now has been consolidated into the IFRS Foundation. I'm sure all of you should still remember the IFRS Foundation. That's the umbrella body in charge of IFRS, the body in charge of IASB, the body in charge of IFRS IC, and the IFRS Advisory Council. Now, the Value Reporting Foundation is under the IFRS Foundation as well. And this Value Reporting Foundation are in charge of integrated reporting. Integrated reporting is still an area that is being developed. Very soon, they will come out with this framework that entities would be able to adopt and use all over the world. But right now, they are just still working. They are still working. But I mean, let's know that they are there. Right now, even the ISSB, International Sustainability Standard Board, is also under the IFRS Foundation. The ISSB, the body in charge of sustainability reporting, that came up with IFRS S1 and IFRS S2. Okay, so I have some historical perspective here. I've talking about this framework. So I'm really going into that. But what I will go into is this fundamental concept. I kind of asked it once or twice. And the focus of this fundamental concept is how integrated reporting sees capital. Okay, the concept of capital is the focus here. So as far as integrated reporting is concerned, the way we see capital is different from how we see it in reporting, in financial reporting generally. Financial reporting for us, your capital is just like either your equity or your debt or combination of the two. So yes, integrated reporting agrees with that and it sees that as financial capital. Is a capital here. So it could be equity, debt, it could be money you generated for operations. That is capital. But integrated reporting sees capital beyond that. It also sees it as manufactured capital. And manufactured capital is talking about physical objects either created by the company in itself or by other entities. And these will include majorly infrastructures created by the government, like road, like bridges, like maybe railway, like train stations. Mention all these infrastructures that make businesses possible. Imagine there are no road networks. How would businesses move their product from point A to point B? So they believe that all these infrastructures are part of what helps organizations create value. and it's part of their capital. Another one is intellectual capital, and this includes patents, copyrights, softwares, rights, and licenses. That's intellectual. Human capital, this looks at their people, their competencies, their capabilities, experience, and even their loyalty is part of human capital. Social and relationship capital, this is majorly about an entity's relationship with their community and with their employees and with their people. It looks at the business ethics within that company. And I mean, social and relationship capital, yes, relationship with government, with key stakeholders. And in fact, we can categorize an organization's social media followers as a social capital, social and relationship capital. And finally, here is natural capital, which we look at things like air, like water, land, natural resources, forests. All these are capital, and we see them as natural capital. You have to know this. I have to find a way to get it right. They have asked it once or twice, but in the last 3 years, they haven't gone back at this. So they have found another ways of asking these things rather than asking these specific things, but you should just know it in case. And as far as integrated reporting is concerned, these are the guiding principles that you have to have at the back of your mind. Is around strategic focus and future orientation. Everything about integrated reporting is report your strategy. How do you use it to create value in the future? That's it. Another principle is the information you report in your integrated report must be related. We must see the flow from your strategy to your performance to creation of value over time. You need to, those information must flow. And it's all about stakeholders relationship. Because we know that there's no way you can create value if you don't have good relationship with your stakeholders. It's not possible. Then only items that really substantively affect the organization's ability to create value should be reported. Conciseness, the report should be very simple and straight to the point. The report should be reliable and complete. Don't, because we are now saying report your strategy, don't create strategy that does not exist for the report. No. Write what it is. So it must be reliable and complete. Consistency and comparability. When you have a report this year, next year just follow it through for consistency and comparability. Those are the guiding principles. And finally, is the content of an integrated report. So when you check organizations adopting an integrated report, this will be the content. This is how it usually flows. Number one is they will talk about their organization and also the external environment. So they can see a lot of things under their organizational overview, maybe their products, their customers, the factory they have, a lot of things they want to say, depends. And also their external environment. So this is majorly would be macroeconomic environment. Another one is their governance, which is their board structure. Their business model, this is talking about how they make money. Like in Dangote's report now, they believe that their own business model is having a geographical spread, operating diversified operations in many African countries. Another one is risk and opportunities. There are risk and opportunities, the opportunity they have. So depending on the environment they are operating, if it's free raw materials you have, if it is free or plenty human resources or cheap labor, or risk, is it regulatory risk? Is it the fact that you are operating in an environment that has high inflation? Risk, just mention it. And another one is strategy and resource allocation. This focuses on capital allocation. How have you spent your money? to create value. Then financial review, which is performance. You should tell us about what was the quantity you sold, what's your profit, what's your revenue, all of that. Then outlook, where do you see yourself in the future? And basis of presentation, everything you tell us here, we believe there's an assumption behind it. We believe there's a reason behind it. That has to be there in the basis of presentation. So I kind of asked this. I've seen it only once in your past question. I think it's a very poor way of asking questions. For them to be asking you what's the content of, because even the framework is a principle-based framework. Yeah, it's good to have a guide. Most companies are following this. I don't think it's at this level to be asking you the content of an integrated report. It's not a good way to. So they asked it a long time ago, around 2018 or thereabout. Since then, I've not seen it again. So what they have been asking now is this: benefits and advantages. I don't really care so much about these other ones, even though I really want you to know them. This fundamental concept of capital, guiding principles, and these content elements. But much more important is that every diet now, whenever they want to ask integrated reporting, they will ask this one. So benefits and disadvantages. One benefit is improved communication. Yes, because now entities are communicating a lot much more. Now you are explaining your strategy and how you have used it to create value. So it's beyond just reporting, yeah, this is the profit, this is revenue, and that's it. But now you explain better. And it's going to make improved decision-making for stakeholders generally. It will even increase your engagement. Because people are seeing a lot more, they want to engage with you. It will reduce reputational risk because they will believe now you are transparent, they can trust you when you are telling them about your strategy. And also, it means you are more accountable. It will increase innovation because there will be criticism, right? Of when people see your strategy and all of that. So you would improve, you would transform as an entity. Competitiveness, in the sense that because people trust you, they will tend to want to buy from you. So you are more competitive as an entity. And your cost of capital is going to reduce because investors' confidence will have been enhanced by this report, especially the one that align with your strategy and future outlook. The guy will want to give you money at even cheaper return. So it will reduce your cost of capital as an entity. And it's going to facilitate sustainable development as an entity because now you are planning for the future. You are showing how you want to create value. So you would be environmentally conscious. You would be sustainable. You would want to take, because it's about stakeholder relationship too, which is sustainability. Okay? And ultimately, it's going to improve long-term performance. So you have to know this. I have 10 here. Find a way to read, write it down, know it before you get into the exam, because 5 marks, 7 marks, that's how it's these parts that make most of our students pass CR. Then disadvantages. Number one is, how do you even convince your top management about integrated reporting? Because integrated reporting means more efforts from the part of the management that is preparing the reports. And how do you convince them? How do you align them? Right? Because what they are looking at is resources. Finding sufficient and dedicated resources is a major concern, is a disadvantage. And also is the existence of legal liability of directors relating to future-oriented discussions. So we are saying you want to do this and this is my strategy, this is how I'll create value in the future. If you don't do that, one or two people could sue the company. So it exposes the companies to legal liability. So how do you address that? These are challenges that are faced by adopting integrated reporting. And there are some regulatory requirements that are prescriptive. Prescriptive in the sense that they're stated specifically how you should report, how you should present your annual report. So in presenting integrated reporting, it must not go against that because local requirement comes first before any international requirement. Okay, so how do you overcome that? And a lot of people would never understand integrated reporting, lack of understanding of it. Because how would you explain to somebody that they should explain their strategy? They should explain how they create value. So convincing anybody will be difficult, but it's a disadvantage, right? That we need to acknowledge. Another one is that it exposes an entity strategy for value creation to the public. Yes, it would do that. Even though organizations will find a way around this, but I mean, we have to pick points from this one that you are asking us to present our strategies on how we create value is a disadvantage because competitors can adopt that and see that as a way of copying your organizations. So we have discussed everything there is around non-financial disclosures. So the bulk of the work rests on your table, guys. You have to go and find a way to get these things into our brain and get ready for the exam. So examples of exam questions are this.
Hello, sir.
Yeah,
Maybe I was caught off then. This corporate social responsibility report,
okay.
because I think I only heard about corporate governance report. I can't really find a space where corporate social responsibility report was spoken of.
Okay, so I spoke about it. It's the last one here. And immediately I related it to sustainability reporting. That social development part of sustainability reporting is what CSR is talking about. So now that sustainability reporting is developing, most organizations just report CSR under sustainability reporting now. So, but as a standalone report, it's just part or how organizations give back to the community and to the people is your CSR, how you give back to the community. So it's really not more than that. So most organizations, you find them reporting CSR now under sustainability reporting. So it's very similar to it. Okay.
Is there any likely questions attached to it?
Yes, there is, which is the content of a CSR report.
Okay.
That's the only questions, the only one that you would find in the exam. So these are some past questions. So last diet, I can ask about integrated reporting, mutually, and CSR. Last diet for, I think, 10 marks or 15 marks or thereabouts. And they also asked this one, last diet. They said digital transformation in the finance and accounting industry was accelerated by technological disruption following COVID-19 pandemic, which reshaped business models and organizations globally. For many organizations, the impetus of full digital adoption and transformation were major enablers for survival and growth required. Identify and explain various ways in which finance executives can embrace digital transformation in accounting, finance, and corporate reporting for 10 marks. Okay, hold on. Before we look at this one, where can we categorize digital transformation in those reports? In those reports we have learned, we learned about sustainability reporting, we learned about CSR, risk reporting, which one again? Integrated reporting, all of that. Risk management, digital transformation.
Oh, integrated report.
Integrated.
Integrated reporting. Digital transformation will be like work from home, right? It's a digital transformation, work from home, right? Digital transformation would be like maybe adopting a technology that you are not adopting before. Maybe, in fact, it could be as basic as ensuring everybody has a laptop. It could be as basic as using Excel. If you're using paper before, don't use paper again, use Excel. It can be as simple as adopt internet. It could be as simple as enable internet access to your staff. It could be as simple as, I mean, look at it at a very basic level. You understand what digital transformation is? Like, go digital. So I don't think, yeah, you could have some leg in risk management, but considering what we talked about in risk management is all about identifying your risk. It's about what's the impact of your risk on you? How do you manage it? That's risk management. It's not more than what I've showed you earlier, right? So it's not risk management. It's not integrated reporting, right? Integrated reporting is just about your strategy. What's your strategy for value creation, right? What's your business model? What's your risk and opportunities? What's your stakeholder relationship? That's integrated reporting. So it's not integrated reporting. I mean, it should not be far from saying that this is sustainability reporting. You are sustainable if you adopt digital transformation, if you adopt advanced technology to probably reduce energy inefficiencies, to reduce waste, to ensure that getting to work is now easier for people, right? What they can do from home. Why do you want to stress people to come all the way? So that's digital. For me, this aspect of that question is on sustainability reporting, is digital transformation, adopting technology. Yeah, sustainability reporting. Okay. So last night, they were asking us that we should identify and explain ways in which finance executive can embrace digital transformation. So in the exam, I didn't talk about this with my students last night, but they asked it anyways. And it's 10 marks. You have to do it. You have to do it. It's easier to pick points here than to pick 10 marks in a question on accounting standard, or else if you have seen it before. So how do we pick points from here? Number one is this, right? Don't be scared to really write what comes to your mind. I mean, when I saw this question, I just did the analysis in my head first. I need to just understand first, what is digital transformation and where does it fall there? If I can know where it falls, then I could give the examiner general benefit of that area of sustainability reporting, right? And if I understand digital transformation very well, I could understand that it can reduce costs. I could understand that it could result in improved productivity. I could understand that another way is they can embrace it is that by adopting advanced technology. Another way is by probably they could automate. There are some tasks that are repetitive. With digital transformation, it will automate it. Then you could start coming up with several points. From there, then you could be, so we have some points here, like automating repetitive tasks, technology, training your staff, having a strategy, use data analytics, advanced technologies. These are some of few points. You can also develop more, but for 10 marks. So when they say identify and explain, the examiner is wanting you to at least give them 5 points and explain it. That will earn you the 10 marks you're looking for. So there are some other questions here. So I won't be looking at everything because I know you can look at these things yourself. I've written the solutions here for you. So if you look at this requirement, it said discuss 4 financial reporting issues that should be considered by companies as a consequence of COVID-19. So they won't ask this one again. Okay, they won't ask. I'm surprised they even asked it in May 2023. Right? I'm surprised, but it came up, right? So again, this one is very similar. It's not so similar anyways, but I have some solutions here for you that you can look at. And another one the examiner can ask you this diet is this recapitalization thing, how banks and companies can get ready for recapitalization, and also why that was the argument for why is recapitalization necessary, right? Why is recapitalization necessary? I hope you are noting down this point. Anyway, this video is recorded, so you can always look at it. You won't be shocked if you find a question like that in the exam. And the same May 2023, ICANN was asking that we should discuss why it is important to ensure that optimal level of disclosure is made in an annual report. So you're just saying you should give us advantages of all those non-financial disclosures I've explained here. So we have some points here that will make so much sense to you with this our discussion, and also the barriers. You see that in 2023 is every diet 2 questions, 30 marks every diet. You would always find it there in your exam. So in 2023 again, this one is 2 marks. Enumerates the content of environmental reports. So you will have seen it, this one under sustainability reports. So I gave you almost 20 content here. It's 2 marks, so the examiner does not expect more than 2 points here. If you have more, so it's just 2 marks. So you don't want to be sitting and be writing unnecessary points when it's just 2 marks. So here they are asking about explain the principles of CSR. It's just giving back to the society. It's just that about social. Just list all of these things. Respect for human rights, freedom of association, labor management, all those social things that we learned under sustainability reporting. And they also still asking, this is November 2022, the content of social and environmental reports. So as you look at it, just take your time, look at all of this. You will see a lot of repetition anyways, but it's still the same thing you're going to find in your exams these days. So I would allow you to go and watch the highlights because I know we have missed the match. So I will call it a day on disclosures in annual reports. Then we are going to progress in our next class when we're going to be looking at another topic entirely different from this. So I really appreciate your patience, guys. If we don't have any question, I think we deserve some sleep. Any question?
No sleep, sir.
I want to sleep, so that you'll be fresh tomorrow for class. You're having class tomorrow, aren't you?
No. No physical class till Thursday before we have online classes.
Oh, okay, that's true.
Oh,
Tomorrow.
see,
Yes, sir.
this corporate governance, is it only content company that are required to give that report?
Yes, SEC requires quoted companies. It's compulsory for quoted companies, but
Only quoted, okay.
yes, it's only quoted companies that is compulsory for.
Okay.
Arsenal equalize.
You've not finished the class.
Okay, that's true. Okay, guys. So thank you very much. So I will see you guys next week in class. Bye-bye.
Thank you, sir.
Yeah, bye.
Thank you,
Thanks,
sir.
sir.